What is up, you guys? Pete Carlo here with DeCarlo Capital, and today we're going to be talking about Facebook. Once again, the market is down pretty big today. S&P 500 is down about 2%, and we currently have Facebook down about 4%, rejecting at this 11-day EMA. We're going to go over Facebook. We're going to go over the support. We're going to go over the rejection. We're going to go over if I think we're going to end up snapping and what my plan is and how you can actually capitalize on this and play this to the utmost ability, I would guess they say, with the least amount of risk and the most amount of potential reward. So hit the like button, subscribe to this channel if you guys haven't already. Go ahead and check out our Discord. It's completely free. The link is in the description. You guys get access to free courses, free live streams, seminars, webinars, as well as a ton of other free content. Our goal is to become the biggest and the best free trading platform out there for traders. Give you guys the best possible community that you can. So go ahead and check it out down below. Now, let's take a look at Facebook. Facebook rejected once again here at the 11 EMA today, which is not a good sign. You can see the RSI is currently pointing down. Once again, not a good sign. And you can see the MACD did cross, but the histogram has actually made a lower high. Not a good sign. So all of these are not looking too hot. But looking at how we normally perform in March, 57% of the time we are green, which you can see that February is just abysmal for if you're an investor or a trader in Facebook. But you can see here, technically March is pretty good, and actually April is the best month to be investing or trading in Facebook. But we did reject here on the 11 EMA, RSI pointing down, like we said, MACD is crossing. One other thing that I am not a fan of is this descending volume that we have here. Volume is actually getting lower and lower each and every single day, which is not a good sign. And as of right now, we are nestled sitting right here at that $200/$202 support that we have drawn out here. If we were to snap this support like we've been talking about for a bit, we will most likely see a drop back down to $180. If we snap $180, we'll see a drop down to $140. So I'm not really expecting $140. I do think that's a possibility, probably about a 40% chance of that happening. But what I am expecting, though, is probably a drop back down to $180. It just seems like we're unable to hold the support, and that big money's not going to come in until that big area of volume is set up down there around $180. Now, as far as flow for the day on Facebook, really not that much. Nothing insane. There is a good amount of flow, but it's nothing really crazy. A lot of weekly calls and puts, and some good strong calls out for a couple of weeks out for about 200, 265. 200, 207, and $210. So nothing insane, but still nothing too bad. About $150 million worth of dark pools came through as well that were probably sells, because you can see we had a big sell off here. Now, how would I be trading Facebook? Well, I think that one of the best ways to do it would be selling a cash secured put down to about $180, expiring maybe March 18th. One of the things with this is it is going to require about $20,000. So if you don't have $20,000, we'll talk about some other ways that you can do this. But if you do have 20 grand, one thing that you could do, like I said, is sell a $180 put. And you can see here that for every $17,000 you put up, you'll make $200 in return, which is not a great return, but it's really not that bad. But very, very high chance of profitability, about an 84% chance of profitability, which is very, very good. Now, if you are bullish, what I would personally say, and I'm not telling you to do this because, like I said, there's a decent chance we could snap this support, but would be a put credit spread. So if you think you're going to bounce here, what I think would be a decent trade would be selling a $200, probably a $200, selling a $200 cash secured put, and then buying a $197, which means as long as Facebook closes above $200 by this Friday, you will end up making $78 for every $178 that you put up, which is not a bad return, but very, very risky. The reason that I would go with one so close to the money is that if we end up snapping this support tomorrow at $200, we're definitely dropping down to 180. So in my opinion, there's no reason to sell a cash or to do a put credit spread at like 190 or something, because at that point you're picking up pennies in front of a steamroller, and it's really not worth it. If you guys don't know how to sell cash secured puts to or put credit spreads, I highly recommend you check out our Discord. It's completely free. If you go down to the courses and seminar section, there's gonna be a ton of free courses there, a technical analysis course, and there are a whole bunch of videos that you guys can watch within that section, teaching you guys about debit spreads, put credit spreads, selling cash secured puts, etc., etc. As of right now, I do have a pretty sizable position in Facebook, and I do plan to add down probably a little bit at 180, like 10, 15 grand. And then if we hit like 150, 160, I'm going to load the truck up. So hope this video helps, guys. Hit the like button, subscribe, and I'll see you next time. Peace.